Okay. Well, hello, everybody, and happy Tuesday. I hope everyone's had a good week so far. I hope it's a good, vibrant start to the work week. And just to introduce myself, my name is Luke Robinson, and I'm a business advisor here at Collective. And Collective, essentially, you can think of us as kind of an all-in-one factory in a tax context, accounting context, and payroll context for a self-employed person. So essentially, what we would do if you came on board with us, we'd set up your business, which means form your LLC, make your S corp election, and then handle your payroll, bookkeeping, and tax filing at the end of the year as well. But today we have this session we like to call Tax Tuesday, and essentially what it is, it's an AMA. It's an Ask Me Anything session. Surrounding taxes, surrounding business administration, best ways to run the business, best ways to run the business in a financial context. So if you have any burning tax questions or accounting questions, I'm here to answer them. But also keep in mind that this is just information. You know, don't consider this official tax advice. Don't consider this legal advice or anything like that. It's always a good idea, to speak to a CPA, a tax attorney, or some sort of tax professional before you act on any of this information. Um, but with that being said, let's go ahead and jump right into it. And I believe we already have a very insightful question that was asked. And that question is, how important are your taxes during the off season? Well, of course, I'm going to say this because I'm a tax professional, but long story short, extremely important. Because yes, your return might be due at the end of the year or by April 15th. That might be the magic due date, which is several months off, obviously. But the thing is, in order to file that return on time, or in order to file it in a non-stressful, easy manner, then you have to keep up with your stuff throughout the year. And when I say keep up with your stuff, I mean, excuse me, I am getting over an illness, so I apologize if I cough or you hear me a little hoarse here. But what's important is keeping up with your finances during the off season. And by that, I mean keeping up with your accounting, keeping a record of your expenses and income. That's really important before you file your return in April. And then also organizing your finances, but also paying your taxes. When you're self-employed, usually you have quarterly estimated tax deposits requirements. So, essentially what that means is you pay your taxes on a quarterly basis. If you don't do that throughout the year, at the end of the year or come April when you file your return, you could have a huge surprise tax bill. So those are the two most important things I would say that are during the off season, is to keep up with your accounting and pay your taxes throughout the year. Okay, what's an S corp? Well, that's a good question since Collective is an S corp company. But essentially, an S corp, it's pretty confusing, to be honest with you. It's not exactly what it seems, because when you hear the term S corp or S corporation or something like that, you think in your head, well, that's a corporation. That's a business entity, and it's some sort of corporation. But that's not necessarily the case. An S corp isn't a business entity by itself or some sort of business structure. It's a tax election. So it's a way for a business to ask the IRS for them to be taxed in a certain way. So, for example, let's say that you're just a sole proprietorship, or let's say that you're an LLC. Let's say that you've taken that step and you've got an LLC in place. Before you make an S corp election, you pay a lot in the self-employment tax. Long story short, and the self-employment tax, it's a flat tax rate of 15.3%. Before you become an S corp, like when you're just a sole prop or an LLC, let's assume that your net income is around 100 grand, something like that. Before you become an S corp, how you come up with your self-employment tax is you take 100 grand and you'd multiply it by 15.3%. All of your money is subject to it. But what happens with an S corp election is essentially, and that's paperwork filed with the IRS, by the way. You set up your LLC first, and then you file paperwork with the feds, with the IRS, to convert yourself or to have your LLC taxed under the S corp tax rules. But essentially what happens once you do that is you become a W-2 employee of your own business. And that's what happens when you file that paperwork with the IRS. And essentially, because you are now a W-2 employee, you'll pay yourself a wage. Like, you'll pay yourself a salary just like you would make if you worked for someone else as a W-2 employee. And please excuse me, I'm going to put in a Ricola cough drop because I'm coughing my head off. And no, this is not product placement, but Ricolas, they're amazing if you ever find yourself with a cough. But when you're an S corp, you pay yourself a salary. You're on a W-2 wage. And the cool thing about them is that the only chunk of your earnings that is subject to the self-employment tax is your salary amount, whatever you pay yourself. So let's say that, someone makes $100,000. But let's also assume that someone pays themselves, like, let's assume that $40,000 of that is considered W-2 salary with an S corp. That first 40 grand is still subject to the self-employment tax. You still pay it. But the other $60,000, or just the rest of your money outside of your salary, that chunk of money is considered a distribution to yourself. And conceptually speaking, you can kind of think of that money as dividends almost. Some people use that term when they talk about that chunk of cash. But long story short, that chunk of money is no longer subject to the self-employment tax at all with an S corp. So, assuming that you make that much money, then how you would come up with your tax savings is you take $60,000 and you'd multiply that by 15.3%. So that ends up, under that scenario, this person has saved $9,180 by making an S corp election. So, once you reach a certain income level, it can become pretty advantageous, to go the S corp route. Oops. So sorry, guys. My phone fell. I'm having a rough week. Okay. Sean has a good question. Can life insurance be tax deductible if owner gets a policy for a W-2 employee, which is also the owner? I need to look into this, but I do not think so. I don't think it's a very good question. It's a clever question, but I don't believe that life insurance for the owner serves any business purpose. So, but again, I could be incorrect. So before I say anything definitive, I am going to go look at the tax law on this. But I don't believe that you're able to write off life insurance for yourself as the owner. Now, health insurance premiums, that's something different. Now, in certain situations, you can route health insurance premiums through an S corp, but typically not life insurance. Now, there are certain situations to where if you're providing, life insurance to other employees or contractors or whatever, then that has a potential to be written off, but probably not to yourself. Oh, here's a good question. Are there any important dates that we need to know for the off season? Well, I would probably the most important dates for the off season in a tax context are your quarterly estimated tax deposit due dates. And essentially they're due every quarter, but they're due in specific dates. So if I'm correct, the first one that covers January, February, and March, that first quarter, I believe that's due by April 15th, that first one. And then the next one, the April, May, June, that one's due by July 15th, and so on and so forth. And the last payment, which covers October, November, and December, that one is due, of course, on January 15th of the next year. So in the off season, I'd say that the estimated tax deposit dates are dates of interest. And again, to be honest with you, I just had COVID this last week, so please excuse this cough drop. I know it's kind of awkward, but it's better than me coughing all over the place. Oh, what are the requirements for an S corp? Well, there's a few, and one, of course, is just setting it up. Like you have to know the correct paperwork to file, and that's the first step is filing paperwork with the IRS. And that paper, the specific name of the form is Form 2553. You set up an LLC first, and then you get an EIN number with the Internal Revenue Service, and then you file Form 2553 with the Internal Revenue Service. And that is essentially making an S corp election. But you've got more requirements after you make that election. For one, you've got to start running payroll. Like if you're making some good money through the S corp, then chances are you need to be on some sort of payroll system. And two is now on the S corp tax return, there are balance sheet information that's required to be on there. So essentially, you're now required to start tracking a balance sheet in your accounting. You don't necessarily have to do that when you're a sole proprietorship or an LLC. So that becomes a thing when you're an S corp. But then you also have an S corp tax return at the end of the year. So, you literally have a business return that kind of comes into existence. So you've got a few extra requirements when you make an S corp election. Ooh, here's another great question. I became an S corp, but I don't want to be one anymore. What can I do? Well, what I would recommend is, for one, the first thing you do is you file a final S corp tax return. So at the end of the year, or by March 15th, S corp tax returns are due by March 15th of every year. But when you file your S corp return, you can indicate on the return that it's the final return. So you do that, and then it's also usually a good idea to send in a statement to the IRS, or send in an attachment declaring that you intend to end your S corp election. So you do that with the IRS. But then it's also usually a good idea to go ahead and shut down the entity with the state. So to go ahead and shut down your LLC as well. So that's how to officially kind of completely shut down an S corp. If I want to instantly become an S corp but don't have an LLC, what can I do? Well, unfortunately, you can't instantly become an S corp. So in order to even make an S corp election, you have to have some sort of business structure formed first. So you either have to have an LLC that's formed, officially formed and recorded with the Secretary of State's office, usually with your state of residence, or you have to have a corporation formed. Oh my goodness. I'm sorry, guys. My phone stand has not behaved very well. Okay, here we go. So you can't instantly become an S corp. You have to have some sort of business structure set up. Okay, I think someone is typing a question as we speak. If I haven't paid my business taxes yet, what can I do? Well, to be honest with you, just pay them as soon as possible. If you're specifically referring to your current year estimated tax deposits, then you might have some sort of penalty at the end of the year, but it's usually not something overly substantial. So I would just catch up as soon as you can with that. But let's say that you're talking about once you file your return and you can't pay your tax bill, then that's a little bit different situation. And then you'd probably want to go into some sort of payment plan, or in some situations, the IRS will entertain settlement agreements if there are large balances and you can't pay it. But for most people, you'll need to go into some sort of payment plan with the IRS. How likely is it that the IRS will catch phony write-offs? Very likely. They're getting a lot better. For one, it's just not worth it to have phony write-offs. Follow tax law. Just trust me. I've seen too many situations where people get audited, and owe a big tax balance. It's just not a good idea to try to I guess, trick the IRS. But now the IRS, for one, they just got billions of dollars in terms of the cash infusion to them. So they're upgrading their technology. They're employing, sort of AI advancements. So eventually they'll become very good at catching phony write-offs. They're already pretty good at it, but eventually they'll become experts at it. Can a partnership be an S corp? Yes. So a partnership, essentially what that is just a multi-member LLC. It's when two or more people are on an LLC. That's essentially, the IRS automatically considers that sort of situation a partnership. So essentially, a partnership making an S corp election is a multi-member LLC simply making an S corp election in the same way that just a regular LLC does. So yes, a partnership can be an S corp, but it's also a good idea to have a partnership agreement behind that outlines who owns what, who gets paid what, and just kind of outlines the legal bones of the arrangement. What does partnering with collective entail? Well, so many good things. And like I said earlier, you can think of collective as an all-in-one solution specifically for an S corp or a business that needs to be an S corp. And the first thing we would do, kind of depending on where you are in the process, the first thing we do is set up your LLC. If you don't already have one, that's the first step. Then we'll make an S corp election on that LLC or on an LLC that you already have created. After we get that done, we will provide a payroll processor because you will be on payroll, of course, with this new tax structure. So we'll take care of that. And then we will also take over your accounting as well, take over your bookkeeping. And we close up the books each month. So every month we will give you a profit and loss statement, a cash flow statement, and a balance sheet, each month for the books. But then you've also got someone on your team, called a member relationship manager. And you can essentially think of them as your account manager. So, if you ever have a question, need like to have a conversation about your taxes or anything like that, then you can reach out to them at any time. And then at the end of the year, kind of as we run your books, or I'm sorry, let me back up a little bit. As we run your books throughout the year, we'll also calculate your quarterly estimated tax deposits. We take care of those too. And then at the end of the year, we will file your S corp tax return and your 1120S. So when it comes to the S corp, we pretty much handle the whole situation. All right. How does the contract work with collective? Well, it's at will. And so essentially, you've got two ways to pay for the service. when you first come on board, usually there's a one-time $199 sort of setup fee, and that covers making the S corp election, getting all the systems set up, doing some bookkeeping cleanup if need be, in certain situations. So that's first off. Then you've got two ways to pay the subscription. If you go the month-to-month route, it's $349 a month at will contract. If you pay in full just for 12 months at a time, they give you 15% off the total price. So then that averages out to around $296 a month, if you go that route. But yes, we're an at will contract, and obviously we hope you stay with us forever. Of course. But if your situation ever changes, if you ever need to go to another professional or anything like that, then you can cancel at any time with Collective. Ooh, here's a good question. Do you think that one day there will be another business structure? Who? I mean, I'm sure there will be one day, but right now I can't really envision what that would be, because right now, like the corporate structure, the nonprofit structure, like the or the limited liability company, that's been in existence as a concept for, gosh, I mean, I want to say like over 100 years. I want to, unless I'm very wrong, maybe it's even older than that. But I'm talking a little bit out of pocket here because I'm not really sure. But I want to say like post 1900s, sometime in the 1800s, maybe even before that, they created the concept of the limited liability company. And essentially that concept has pretty much stuck around since then. But hey, there could be new business structures in the there could be more business structures in the future. And that's all the time that I have left, unfortunately. And I enjoyed it, of course, like I do every week. But excellent questions that everyone asked. But if you think that an S corp might be in your best interest, or if you find Collective services valuable, please feel free to go to our website, collective.com, and book a call with one of our advisors, or send us a message on social media, and we'd be happy to have a conversation with you.